What's up, fam? Bam? It's your boy James R. Davis Sr. coming to you live about real crypto talk. Today, we're going to be talking about Bitcoin and how is it taxed. We're going to take this article from February the 16th in the U.S. News article. So let's take a read about this. Cryptocurrency investors must know the rules before they run afoul of the IRS. Folks, make sure that you're paying your taxes. Um, we're not here for tax evasion, okay? We're here for tax avoidance. All right. When you understand the differences between the two, then you will save a lot of money on your taxes. Let's see. Bitcoin may be an unregulated asset, but the IRS still wants a share of your transactions. Bitcoin and other virtual currencies are taxable, which means all of your Bitcoin transactions must be reported on your tax return. It doesn't matter to the IRS for US taxpayers where the Bitcoin is acquired or disposed of. It must be reported on your tax returns and any income or capital gain or loss indicated, says Steve Skankchi, Chief Economic Advisor at Keelpoint. That said, tax reporting on Bitcoin can be as mind boggling as the cryptocurrency itself. Here are a few points to help you figure out how Bitcoin is taxed. Make sure that you like and subscribe, turn on your post notifications. Make sure you get with your professional, your tax advisor, about paying your crypto taxes. So you want to make sure that you're doing the right thing, okay? Bitcoin is property, not currency. How you receive Bitcoin matters for taxes. Reporting to the IRS. Bitcoin is property, not currency. First thing to know about Bitcoin is that it's property in the eyes of the IRS. Regardless of how you feel about Bitcoin being a currency or whatever, right? In the eyes of the IRS, if you live in the United States of America, it is considered as property. Despite how you may view it or use it, the IRS says for tax purposes, Bitcoin and other digital currencies are not currency. They are capital assets, which means they're taxed like stocks. Let me just put this out there because this is real crypto talk. The IRS so full of shit. I'm just gonna say that. They're so full of shit, man. Anyway, let me keep it moving. Because the IRS views Bitcoin as a capital asset, it doesn't make a difference whether you sell it as an investment or transfer it to another party as payment for goods or services. Skank says any change between its value at the time of sale or transfer and its cost of acquisition is treated as a capital gain or loss and taxed accordingly. This is actually good news for long term Bitcoin owners. It really is, to a certain degree, as it means you'll get more favorable tax treatment. Now, if you know how to structure things, then yeah, you'll have a way more favorable tax treatment. Currency is taxed at ordinary income rates, which is less favorable than capital gains tax rates, says Eric Priz, a senior partner with Signature State and Investment Advisors. If you hold Bitcoin for more than 1 year before selling it at a gain, you'll only have to pay capital gains tax of 15%. Hey, that's what's up. 20% for individuals earning $441,450 or more, and as low as 0% for individuals who earn less than $80,000. Wow. On the other hand, if you hold it for 1 year or less before selling, you'll pay ordinary tax rates on any gains based on your tax rate. Let me read that again. On the other hand, if you hold it for 1 year or less before selling, you'll pay ordinary income tax rates on any gains based on your tax rate. If Bitcoin is bought inside a retirement plan, such as a 401 or IRA, it is treated like other investment assets. There is no tax on gains, but retirement plan disclosures are taxed as ordinary income. Let me read that again. If Bitcoin is bought inside a retirement plan, such as a 401k or a IRA, it is treated like other investment assets. there is no tax on gains, but retirement plan distributions are taxed as ordinary income. How you receive Bitcoin matters for taxes. How you receive and use Bitcoin can impact the taxes you pay. For instance, mining Bitcoin creates a taxable event. You need to calculate the fair market value of the Bitcoin on the day it was mined and pay income taxes on it, says Tyson, a chartered financial analyst and portfolio manager at Baker Boyer. You can determine the fair market value by converting the cryptocurrency into US dollars or into another real currency, which can be converted into US dollars based on the established exchange rate listed on the exchange. The fair market value is whatever the cryptocurrency's value is at the date and time the transaction is recorded on a distributed ledger. If the transaction is not recorded on the distributed ledger, then you can use the time it would have been recorded had it been a recordable event. If you were then to use your Bitcoin to buy a car, you need to determine the fair market value of the Bitcoin on the day you make your car purchase. You can look at it like you sold your Bitcoin, but instead of getting money for it, you received another item of value. Romanik says. The difference between the fair market value of your Bitcoin versus the fair market value of the car will give you your gain or loss, which you report when you file your taxes. There are a few Bitcoin transactions that don't result in an immediate taxable event, such as if you receive Bitcoin as a gift or donated it to charity. Once you dispose of your gifted Bitcoin, however, you need to pay taxes accordingly, which means you will need to know the cost basis of your gifted Bitcoin. This depends on whether you have a gain or loss when you sell or dispose of it. If you have a gain, the basis is the donor's basis plus any gift taxes the donor paid. Let me read that again. If you have a gain, the basis is the donor's basis plus any gift taxes the donor paid. If you have a loss, your basis is the lesser of the donor's basis or the fair market value at the time you receive the gift. And if you have no way of knowing the donor's basis, which probably most people will have no clue, possibly, then you get to record a cost basis of $0. If this sounds like a headache waiting to happen, it is. I would recommend keeping things simple and avoid regularly buying goods and services with Bitcoin until tracking tools are improved, Pritz says. Reporting to the IRS. As you can likely see, keeping meticulous records of your Bitcoin transactions is key when tax time comes around. Unfortunately, since owning digital currency isn't as straightforward as owning stocks, the institution you hold your currency at may not issue the 1099 form to help with your tax reporting. It is up to you to notify the IRS of any gains or losses associated with Bitcoin taxable events. Yeah. The IRS recommends keeping records documenting any receipts, sales, exchanges, or other dispositions of digital currency and the fair market value at the time of the transactions. The potential silver lining is that while you must account for capital gains from Bitcoin, you can also deduct capital losses. Tip, 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 tip. Um, yeah, this year, the IRS has updated the 1040 tax return form to ask taxpayers directly on page whether they have ever received, sold, sent, exchanged, or otherwise acquired any cryptocurrency. He says, so anyone who makes income from cryptocurrency must report that income and pay the required tax. The Financial Crimes Enforcement Network, FinCEN, better known as FinCEN, also recently announced it intends to change the report of foreign bank and financial accounts requirements to include cryptocurrencies in foreign accounts as a reportable account. Typically, Individuals must report any financial interest outside of the country that exceeds $10,000. With this change, cryptocurrencies like Bitcoin will count as financial interests that need to be reported. And don't you think you can just forget, quote unquote, to report? The IRS is very aware of these pitfalls and is continually increasing their tracking and scrutiny of this emerging investment. So, folks, make sure that you are doing the proper things with your taxes. Let me just share a real quick tip with you. Let me see here. One thing that I can suggest that you utilize is, where is it? Where is it? Right here. Crypto Trader. Tax. There are several softwares that I use that I recommend for my mentees. You got to be a mentee to get that information. But here's one that I will encourage you to go ahead and get. The link will be below. Click it, get started for free. Okay. Connect your APIs to here and let it do the simplifying for you. Okay. So that's my 2 cents for today. That's real crypto talk for today. It's your boy James R. Davis Sr. Again, make sure you are paying and reporting your taxes. You do not want to get in trouble with the IRS. It's your boy James R. Davis Sr. signing out. Hopefully this helps. Talk to you guys soon. Make sure you like, subscribe, turn on the post notifications because we're going to be dropping some exciting information here over these next few weeks. Talk to you soon. Peace.